Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for December 6th, 2018. We'll update our levels, our spots, expectation markers on the broader indices, especially after the departure from the 2811 level, 2800, all the way through 2650 toward 2626 and today's rally. But we'll focus on some premium sales and probabilities of expiring throughout the remainder of 2018 and some leading stocks and, of course, the indices. Let's start with our bigger picture. We still have this concept of the high to low, low to high, high to low, low to high, high to low in terms of the plan, and that just builds trades. If we're looking at game planning or just what to do for trades, setups, intraday, we look at the daily chart picture, roughly 2800, 2811, and the 2626, 2630 level, and that's our ES futures low and high for the recent trading range. Multiple strategies emerge for us from that, and that includes premium sells of the calls, usually verticals or in-out spreads, on the upside above where the market is expected to hold resistance. And then once we're down at the lows, especially once we're down at the lows, because the volatility index tends to be higher at market lows or inflection points or otherwise support pivots. So I'm recommending little put sells beneath key inflection points, 2600, 2550, and the like. Use spreads. Or otherwise, take a look at individual positions, swing trade, high to low, low to high, and that's what we've been doing in terms of our intraday trades and the videos and recommendations that we look at. But that's mainly where we are at the moment, which is another low to high, potentially, push away from 2626. So if the market can stay within these boundaries, we do have at least an edge or expectation for the remainder of December. Unless we get underneath at some future point, 2600, that could open up a liquidation swing to 2550 or even lower than that, or distinctly above, let's say 2820. That opens a swing up to 2900 or above. But until that happens, let's shift over to some probability of expiring cone. And this is just a TheoTrade indicator of probability of expiring, taking into account our option chains. So it's mainly these with respect to implied volatility and the price levels that expand out into the future. Again, looking at S&P futures, but this would work for just about any leading stock in most ETFs. But the main point is this. With these probability grids, one standard deviation, roughly 68%, or two standard deviations, roughly 95%, that's going to be your area to sell premium or buy premium, or at least conceive of, plan of, prepare for swing trades within these boundaries. Right? We've stayed within them, roughly speaking, for the bulk of October, November, and now potentially into December. And so we can just zoom in. Don't go too far out there, but look into 2019, into January, maybe February at the most. Sure, these are wide profile levels, but just take into account trend lines and anything we have in terms of spot markers or levels. Don's gravity spots work just well for these purposes. So at the moment, we're pushing up away from 2626 or 2630 up toward maybe 2800, and that just keeps this range dynamics, range parameters going. If we just extend the current volatility into the future using this tool, we do see these boundaries or these arcs, which is one standard deviation in terms of expiration or just where the market expects or the volatility suggests that the market could or probably would be. And that gives us guidance once again for planning. We can do that, of course, with the S&P. We can zoom into the Nasdaq into January and see that its levels take us probably beneath the session high or beneath the 2018 high, but also probably above the 2018 low. So we're looking at, simple to say that now, of course, but not for a new high in the Nasdaq, but also not necessarily for a new low in the Nasdaq, and that's just into December. For the Dow futures, similar logic exists as we push forward into 2019. So mainly, once again, probably, right, 68% chance, implied volatility speaking at the moment, probably be underneath the high or above the low. And what does this help us with as well? Again, selling premium, expectations, any positions open, swing trading, intraday tactics. That's on the indices themselves. We can certainly go inside stocks like Amazon and take a look at those. Don't forget, when markets fall, when price falls, option volatility expands, the vega expands, and of course the price of the option goes up with respect to volatility. Volatility, higher vega, higher option prices. But also that allows us to sell premium at distant spots, mainly to the downside. When markets rally, option premium or volatility declines, and the option premiums with respect to other factors will be lower on a lower volatility or lower VIX. So keep that in mind in terms of selling premium with respect to these levels and any expectations you might have. So Amazon, probably the same thing, and that's just the thesis I want to leave you with in tonight's video with respect to what we are looking for the bulk of 2018 into 2019. Markets have us in terms of roughly one standard deviation of the price metrics. We can see this on the chart, of course. If we just jump inside the trade tab, we can see where these arcs or these grids come from. Not quite this, it's actually probability of expiring, but these implied volatility charts, grids with price levels projected out into different options expiration cycles. That's mainly what we're looking at here. And again, it's all probability and it's all market premium and implied volatility, but it does give us clues of what the option market's thinking, what levels are important, and where we can expect this price to be going out into different points in the future. Of course, as we get to these points in the future, update your charts because volatility will update each day and of course each week. But for Amazon, it's once again probably projecting a move not to 2018 highs, but also not beneath 2018 lows. Probably staying within this point range, 1800, maybe a little bit higher, but also down to lower point 1500. Sure, it's a wide range, but that does guide our decisions, all things being equal. Apple is a little bit different because it has broken free of its rising trendline channels, liquidation swing, and now it's playing off of about the 180 per share level. Apple is again different because of specifics to its stock, but here are the pivots for Apple going through the rest of 2018. And of course, we can look at other stocks, including Netflix, which also has sold off a little bit lower than other technology names. And the broader base, we're again focusing just on 2018 price patterns, trend lines, key price levels, and where that one standard deviation line is. Probably not well beneath 240, but also probably not well above 340. We'll end this logic with Google or Alphabet. Now, Alphabet Google has been in a sideways trading range for the bulk of 2018, a little bit weaker than some of its other tech names. Pushing forward into January, February, we can see that Google, maybe not surprising, probably stays within its roughly just shy of 1,200 and 1,000 per share pivot. These are expected levels, and of course, any number of things we can do with this information. Swing trade the stock, puts and calls. I would prefer maybe vertical spreads, premium selling, risk management, intraday trading tactics, and the like. These just give us expectations beyond the chart, and once we combine these profile levels, the probability of expiring levels, with our implied volatility and price levels, that gives us a little leg up on the competition. Doesn't mean it's going to happen, certainly. It's all probability, but this is a better way to guide decisions using option premium, implied volatility, levels, trend lines, and as we go out and extend these in the future, positions and trades develop naturally from these spots, markers, levels, and targets. Have a good evening. This is Corey Rosenblum with your Theo Nightly video for December 6th, 2018.